Have you ever wondered about the impacts of a company buying back its own shares? Well, let's delve into a recent example. Picture this: Apple, the tech giant, deciding to buy back its shares. Not just any amount, mind you, but a staggering $110 billion worth. Now that's a lot of zeros. This decision wasn't taken lightly, and it marked the largest buyback in the company's history. But what does a buyback mean, you ask? Simply put, it's when a company repurchases its own shares from the marketplace. This can have several implications, but more on that later. Now back to Apple. The market didn't just shrug off Apple's decision. Oh no, the company's shares surged, increasing its stock market value by over $160 billion. Quite a reaction, wouldn't you say? This decision marked a significant moment in Apple's financial journey. Now, how did the market react to such a massive buyback? Well, let's just say the news hit the trading floors like a tidal wave. Following Apple's announcement, the company's shares took a swift hike, boosting its stock market value by a whopping $160 billion. That's right, you heard it correctly, a surge worth $160 billion. Now, this isn't just about Apple flexing its financial muscle. It's a testament to the company's resilience and the market's faith in its ability to deliver, despite a slight dip in quarterly revenue. And how does this compare to other tech giants, you ask? Well, it's interesting to note that Meta, formerly known as Facebook, also recently announced a substantial buyback program. But with Apple's latest move, they've undoubtedly raised the bar, setting a new benchmark in the realm of tech buybacks. The market's reaction underscored the significance of Apple's buyback. So, what does this all mean for the future of Apple? Let's delve into the impact of this monumental buyback. Despite Apple's quarterly revenue taking a dip, it was less severe than what the analysts had anticipated. Tim Cook, Apple's CEO, is optimistic, stating that they expect a return to revenue growth in the current quarter. And that's not all. For the quarter that ends in June, Apple is projecting growth in the low single digits in overall revenue. Wall Street's projections align with Apple's, expecting a 1.33% revenue growth to $82.89 billion, according to LSEG data. But what about Apple's services and iPad revenue? Apple's CFO, Luca Maestri, has shared that they expect these areas to grow by double digits, and the company's gross margin forecast for the fiscal third quarter, a promising 46%. When we look at these numbers, we see a company that's not just weathering the storm, but plotting a course for continued growth and success. Apple's buyback decision is a testament to its resilience and forward-looking approach. So what can we take away from all this? The crux of the matter is that Apple's decision to buy back a record $110 billion of stock is monumental. Market response was swift and positive, adding a whopping $160 billion to Apple's stock market value. Looking forward, the company projects growth in services and iPad revenue. Despite a slight dip in quarterly revenue, Apple's outlook remains optimistic with anticipated growth in the current quarter. Apple's buyback decision is not just a financial move, it's a strategic step that speaks volumes about the company's confidence in its future.